Welcome to Investors Insights. Our topic today is dose of reality. We chose that topic not only from the standpoint of what's taking place this week, but also to provide you with information and knowledge that you'll be proud not only to learn about in relation to your portfolio, but also proud to share with others as we continue to navigate through this 2020 year. It's hard to believe that July 15th takes place this week, the extended time period to get your income taxes in. It's also the last day to get your 2019 IRA contributions in. We've sent out emails about it to make you aware of it, and I wanted to mention it in this vlog as well. But while all of that is taking place, we've also got other issues occurring, and we're going to talk about earnings and dividends. Earnings of companies and dividend payments. And if you're getting income from dividends, you might want to listen throughout this vlog to what we have to say. So Bobby, I'm going to go to you first because you brought up that this is a dose of reality week as we start to look at earnings.
Yeah, Greg, dose of reality is definitely coming this week as we start second quarter earnings season. And look, we expect to see some ugly numbers. The second quarter was a true first all-COVID quarter, probably the worst quarter we'll see in the past 10 years.
Actually, that really rattled the cages there a little bit in terms of, wow, past 10 years. But actually, you brought up a really good point in regards to 2008, 2009 in relation to earnings.
Absolutely. The bottom line of it is that the quarter when the financial crisis occurred, which was fourth quarter 2008, was a lot worse on earnings than COVID is. You know, Trey told us last week that on average, we'll probably have an earnings drop in the S&P on average about 45%. Guess what? It was 69% in the fourth quarter of 2008. So the fundamental point is we've had it worse than this before. And the other things that are happening with it too is we've hit the economy with stimulus much faster than we did with 2008. So we've got the potential from what we've learned, businesses being a lot more efficient in their modeling, to come out of the backside of this much faster. But our viewers need to know it was worse at that point.
You know, that's the kind of information we want to provide. You know, it seems bad at the moment, but maybe it's not the worst we've been through. And Bobby, talk about additional announcements or what our viewers need to be looking for as this week progresses.
Yeah, look, we've already seen a third of companies pull their guidance. And so what's most important this week and next, and talking about second quarter earnings season, what do the companies say about going forward? What do they say about current third quarter and the rest of the year? That's going to be most important in deciding between what the market does. And so again, we know the second quarter is going to be ugly, but what are companies saying about going forward? And also there's going to be some companies that will have to show a path forward to justify their current stock prices. And so it's going to be a very interesting second quarter earnings season and a lot to decipher through.
Yeah, so we're going to be watching all that very closely. And also, while that is taking place, Trey, you talked about a topic of dividends and what's occurring with stocks, companies, and their dividends. Talk about that while so much of the media is focused on earnings, there's something behind the scenes that's taking place.
That's right, Greg. So earnings become dividends that get paid to investors. And in the second quarter, we saw dividends get cut by publicly traded companies in the U.S. by $42.5 billion. That's $170 billion of multiplied by 4 for an annual rate. That's money that typically goes from corporate America to the individual investor. And that investor uses that money either to reinvest in the market, or if they're older, they typically live on those dividends. With interest rates being so low, the 10-year treasury is around 60 basis points. Dividend investments have become more and more important and a more important part of the individual investors' financial future and financial plan of producing that income that they desperately need to live on. And if you're a younger investor and you're reinvesting those dividends, that money comes from a company, and then you as an investor get to buy back into either that company or invest in something else. So it also creates demand for investment products, which pushes prices higher. So if you're looking back at the second quarter, that large drop, largest since 2009, what are companies going to do going forward? That's where there's a lot of murkiness that we'll see as companies report earnings. We know what they did in the second quarter. We don't know what they're going to do going forward. Financials of large dividend payers are going to be reporting soon, and that's very important. How companies price in the future value of cash flows is what gets the current value. And if you're not paying a dividend, it's very hard to factor that in.
Yeah, and Adam, you brought up about one sector in particular regarding energy. Just talk about that.
Yeah, so we might see disruption in the energy sector. This might impact oil prices as well as U.S. production and U.S. companies as well, and their ability to pay out these dividends.
So in essence, what we're saying here is CD rates are low, bond yields are low, and now we're looking at dividends being cut, another way in which investors receive income. And so in this economy, we need to be paying attention to that. And it's also why we emphasize here at Five Plan Partners why everyone needs a financial blueprint to understand your income streams, to understand, are you on track to reach those dreams, goals that you had, in worst case scenarios as well as in good times. So as we navigate through this, we want to keep you updated and understand that the plan, the financial blueprint, your financial house needs to be in line with your portfolio. So that's how you're able, that combination, to go towards your dreams and goals and get there. So on that note, we're going to keep you updated throughout this week, as we always do, with social media and as well as one-on-one conversations and vlogs like this that we send to you. In-person meetings. We're doing the Zoom, the WebEx, the Microsoft Teams. We're social distancing, but we are communicating in so many different ways with our clients. And we appreciate you, as well as the fact how you have shared this vlog and other information that we have sent to you with others, helping them keep down their anxiety as well in this COVID-19 2020 year. We hope you have a great week. We hope things continue to evolve for you as well. And we'll look forward after July 15th and everyone's taxes are filed. We'll look forward to keeping you informed. Thanks.